Okay, a little bit more on this law of vibration, active type structure. Going back to my sheet that I showed on the prior videos, let's say that this 100, 200, 400 ascending, descending active total of 1400 days, 700 in the ascending, which will take to be the left first side, and then 700 in the descending. So that means we have a time times in half a time, or three ascending actives of 100, 200, and 400 days. And then when we get to the middle of the octave, at the end of the 7 unit harmonic period of 100, we start the descension. Only the descending octave is the 400 first. The second octave then is half of that, or 200, and the final octave is half of that, or 100. So you can see that basically from the center of the cycle, we are doing a mirror image fold with that as far as these time points go. So what we want to look at inside these octaves, we're going to just look at the diatonic pressure points on a time scale. So inside the octave of 100 days, if we use the Pythagorean diatonics of eighth quarter, third half, 2/3, 7/8, and then 100%, our pressure points are going to be in the first octave 12.5 days, 25 days, 33 days, 50 days, 67, 87.5, then the end of the octave at 100. That's from your point of origin where you would start to mark those time periods forward. Then when you get to the second octave of 200 days, now your diatonic, your first ratio, instead of 12.5, it's going to be 25. And then you have to add that to the first octave of 100 days. So your next pressure point in time would be at 125 days. And then you carry that forward. And then the end of your second octave is at 300 days, because you have the 100-day first octave, then the 200-day second octave. Then you just work that forward. And I have all those counts marked in here. I didn't double check them. I just did them real quick. So you might want to check the math and make sure I did those right. But for the example, it's up to you to verify it. I'm just going to give you a quick example of application. So I'm going to go, I just plotted the first octave out on a chart. Let's take a look at that and see what that looks like. All right, so I just quickly grabbed bar charts and plotted this from the low of April 2020. This is cotton futures. And I'm just looking out here at the first 100 days. So starting at the low, marking out 100 days, here are the internal pressure points. The 12 days was this high here. The 25 days was a minor low. The 33 was a bar off of the low. The 50% was at this high. The 67% was at this high. The 87 bars, or the T note in the octave, was right at the end of this consolidation little triangle, and we had the breakout right at that point. And that ran right up to the end of the octave at 100 days, where it flipped back over. Okay, so now that is how you address the time scale. Now, I randomly grabbed that 100 days as the example. Is 100 days a good fundamental unit? It seems to be that it is, right? So now you can see every pressure point was hit, was effective. It was exact or within a day. For trading purposes, you want to identify, am I in an uptrend or a downtrend? And that's going to dictate how you're going to want to trade these pressure points. So obviously, we're moving up off a low. We want to be trading to the long side, so we want to get in at the point where we have the lows, and we want to sell off, take profit when we get to the high points, right? So right here, you would have had opportunities here at the 25%. That was a low, gave you 3-4 days up. Then at the 33%, we had a nice long right up to the 50%. And then the next one was a high. And then the last one gave you the long opportunity at the breakout point to get entry right here as this triangle was broken to take you right up to the 100%. So each trade setup basically gave you the end of the trade point except for the 25% one, because that went up for 3 days, then came down to the 33. So that's an example of how you would do that. Then this is just the first 100 days. Then you would move from here and count the 200 days, and then count the 25, 50, so forth, and project those forward to see how that works. Now, is this a true cycle? I'm going to say, okay, I don't know. It's up to you to test and verify and see if that is a true cycle and if it works on your markets of interest.